2015 was an extraordinarily challenging year for our industry and for our company, quite frankly. We saw the lowest commodity prices we had seen, primarily oil and gas, but as well power prices, storage spreads, and every price that this industry depends upon is at the bottom of its cycle. So by design, our portfolio is structured in a way where we have minimal exposure from a revenue perspective to the downside of commodities, and on the flip side, to the upside of the commodity cycle. We're to provide that 30, 40, 50-year reliability of energy to the folks that need them. So we're again, our 2015 results show that resiliency. We have a diversified asset base across 3 geographies, across 3 businesses, and even within those 3 businesses, we have a diverse portfolio of how we're contractually structured. 95% of our revenues are underpinned by either contract or regulated business models, which give us great predictability of our cash flows. And on an annual basis, we keep adding to that portfolio. That gives us the ability to weather these cycles better than most companies. We retained our A-grade credit through the bottom of the cycle, as we've done in other cycles before. And that's what gives us the confidence to continue to indicate to our shareholders that we'll be able to grow our dividends on an annual basis through the end of the decade in that range of 8 to 10%, which we've been doing for about the last 15 years or so. Our key priorities for 2016 are the same as they've been for the last 15 years. Firstly, we want to make sure that we safely and reliably deliver the energy that millions of people need every day. That means every person that works here goes home from work safe every day, and that we deliver our product without incident and with great respect to the environment. That's job one. And again, emerging from 2016, I'd like to see that track record unblemished. We have about $13 billion, $14 billion of projects that are in the works right now, that are under construction or in the permitting process, things that are closer to home, what I would call more organic kind of growth. They're going to be coming into service between 2016, 17, and 18. So over 2016, we have to make the progress that each of those projects is scheduled to make this year. Our larger portfolio projects are going to be more difficult. They continue to be challenging. They're tremendous options for this company to continue to grow. There's about $45 billion worth of things. They're in all 3 of our businesses. They're gas pipelines to the West Coast to deliver to LNG, proposed LNG projects. They're crude oil projects to get market access for Canadian crude oil. They're things like Bruce Power, which are going to provide the baseload energy for a growing Ontario energy need for decades yet to come. They're in all 3 of our core businesses, and we need to advance those projects because, as I said, we're in business not for this year, not for next year, but for this decade, the next decade, and the decade beyond. And those are important projects for us to continue to advance. We announced a reorganization of our company in the middle of 2015. That obviously creates uncertainty and a lot of questions for our employees. The key in it is ensuring that we continue to position ourselves for growth going forward. Our company has grown from $20 billion to about $65 billion over the last 15 or so years, and the organizational model that we were using has basically we've outgrown it. So what we've done essentially is we have decentralized our organization and pushed just greater decision-making capabilities into the hands of those people that are closer, what I call the action, those that have the best information to make the best decisions possible. We've always depended for the last 50 years on sort of the sanctity, if you will, of science and objective decision-making. That got thrown out the window in the Keystone XL decision, and that has a profound impact on the way we think. My fundamental belief is that's an anomaly, and that in the future, science and objective decision-making, decisions based on facts, will be what prevails in the future. But in terms of the impact on the company of that decision, obviously there's a large financial impact. We made a large capital investment on the basis that that those regulatory processes were sound. We've been doing that for 50 years, and that changed. That cost us, we spent about $2.5 billion US in putting in place rights of way, agreements, regulatory approvals, as well as equipment, pipe, pumps, motors, in preparation of construction. I'm still of the belief that at some point in time, Keystone XL will be built, but in that interim period, obviously we have to account for the financial charges associated with those expenditures, and we took those in the fourth quarter of 2015. We also initiated 2 legal challenges with respect to the decision-making process on the basis that they were arbitrary, they weren't fact-based, and were inconsistent with previous decisions. We will continue to defend those and our shareholders with great vigor. Well, I think as you look into 2016 and beyond, our environment that we operate in is going to be continually challenged, whether that be from activists, prices, capital markets. The world around us is getting more and more volatile than it's been in the past. So we need to make sure that we maintain our diversity, that our strategies are flexible to be able to manage when those risks are visited upon us, and there's no question in my mind that they will be visited upon us. We will see challenges and risks as we go through 2016 and beyond. What we have to do is make sure that our strategy is resilient and that we're prepared for those challenges. There'll be bumps in the road. No question 2016 is going to be a challenging year for us, but it can also be a significantly transformational year for us if you think of what we've got to do, and if we get those things done, we'll emerge from 2016 a much stronger, more diversified, and healthier company.